Thursday, November 16th. Stan Ehrlich, and this is Market Analysis. First comment, next week is Thanksgiving week, and I will not be able to do my YouTube recordings next week. I may be able to do one for Friday of next week, but it won't be until Sunday that I do it, referencing the whole week of next week's activity and bringing you up to date. So I apologize. Going to take a little family time, and I will be gone all of next week. No YouTube. Now, you guys know I start out with the stock market indexes, the E-mini. This is the December futures contract E-mini. I've been talking about since it jumped like crazy on Tuesday into overbought territory, and it broke through a resistance level. So we got overbought. We lost upside momentum yesterday. There was a new high, but the close wasn't that good, and it was a little bit below the previous high. And today we're seeing a little bit more bearish evidence, a slightly lower low, no new high, and still overbought, with a current quote that's not particularly that bearish. I mean, it's holding up pretty well. So the rally up to and bumping against the beginning of a resistance area, which was about 45, 44, seems to have stopped the rally so far. And that's fine. If I'm right, we're going to start to drop. Well, we already started maybe, but down to at least 44.33. Now, that is my minimum downside expectation. It'll take several days or a few days next week, and it could drop off a little bit more than that. I'm thinking no lower than 43.53, but in that zone, and it looks very likely that 44.33 would be about right for it to stop dropping, and it's not that big a deal, and turn back up again to continue this long-term bull market until, of course, we see the Santa Claus rally. And I promised you, and I will, we're updating our material to explain exactly what to do, when to do it, why to do it, etc. Actually, I don't know why, but it just keeps happening every year, like the October lows again this year. That's, in the last 31 years, 28 times that it's bottomed out in October. Only missed 3 years. Last year, it was unbelievably spectacular and a bullish signal at the bottom of the move. This year, we didn't get a bullish signal, but it sure as heck bottomed out in October 27th, in oversold conditions. Next chart. Come on. Good. Spider. We have these gaps, and there's 4 gaps to close. 3 of them are pretty sizable. Now, we're not probably going to go all the way back down to 418 to close that very small gap at a major support area, which we bounced out of from the October lows. Instead, my expectation at this point, because I really didn't expect the market to jump up on Tuesday the way it did, with the very good consumer report, CPI, there was a lot less inflationary than expected, so bullish for the market. So it jumped up like crazy. But that is in the market now. That news is in the market. It's old news. So it's been digested. I expect this gap to be closed. I think we're going to come down to 441 and change, and maybe a little bit lower, dipping into some support, and get down to 431. So that's my downside objective. There's a 10-point range, and I'm probably going to be able to scream bloody murder as it turns back up somewhere in that 10-point range in several days, probably next week when I'm not here. Next, we got the spider 1-minute chart. You can see the opening here was down very slightly, basically unchanged. we had a little rally, really didn't go anywhere. And now I'm showing you the last 5 days or so. 1, 2, 3, 4, 5. Yeah, and today. So we've gone flat since the rally high and trading range of Tuesday. And then yesterday, Wednesday, and today, Thursday. And it's yellow because it got overbought. So this is exactly what I would expect, or a little more bearish price action, to be honest with you. Now, if we break below today's low so far, 448, then we probably are going to start to drop off a lot more quickly, a lot more significantly, and begin at around 446 to close that higher gap. And I'll go back one chart, and I am talking about this gap right in here. So what we've done is gotten below yesterday's lows, but not below the day before. We'll see what happens. I'm expecting a little bit more of a dip down. It's not that big a deal. It's another short-term buying opportunity, period. And now we're looking at the DIA. I'm sorry, the QQQs. I have a surprise for you in the DIA. Qs are holding around unchanged. They're down very, very small 12 ticks, nothing. It could turn green higher on the day any moment. But the point is, the current quote is almost the same as yesterday. It was almost the same as Tuesday. It's going flat. There's a gap to close here, and this should probably be, well, I'm not going to change the color now, but this blue zone. So I'm expecting a move down to 378.5. And again, maybe a little bit more than that, 373. Next chart. And these gaps I don't think are going to get closed anytime soon. Maybe not for a long time. This very rare, very rare. Remember, I've been doing this over half a century. I used to draw my charts by hand on Kufel and Essler 471810 chart paper in the 1970s, before the very first technical analysis software for the Apple computer was created. It was called CompuTrack. Great software at the time, great organization. Okay. So, and I still have those original pencil drawn charts. Wow. I think this is the gap to watch for closure, and maybe a little bit lower down to 374. Sorry about digressing there. NASDAQ futures contract has the same steady, if you want to call it that, but I call it a loss of momentum. I can't remember the last time we saw so many days in a row with a higher close, day after day, and it was 8 days in a row, a week and a half. Then a sell signal. It didn't work. We got stopped out. We had a small loss. I'm waiting, I hope, for another sell signal. This overbought condition provides the environment for it. The high on the rally was almost a new high for the whole bull move here since the bottom of the previous bear market of 2022, which was on October 13th. And we did get a buy signal pretty much across the board in almost everything. It was a whopper of a day. I remember very, very well. Go back to listen to my recording a day or two before that, and the day of, and maybe a day or so after. Anyway, next chart. DIA does have, and I got to rescale here, just a moment, please. And I'll do it this way. Does have a bearish engulfing sell signal today. Official ER sell signal red. That's what I love. This is an official ER buy signal green. It worked for a couple of weeks and had a very nice rally. Let me find some others for you here. Top of the market almost, bearish sell signal, and a complementary thereafter. Buy signal just before a huge rally on June 1st of this year, and sliding to the left here. Okay, premature, and then the top. Nice break. Don't see any others at the moment. Okay, going back to current. This is it. We're in a resistance area. We got overbought. We have a bearish engulfing. We've got all the criteria to generate a red bar or candlestick. If I was showing a candlestick chart, it would be a candlestick chart and red. And everything would be white, red, or green, yellow or green. Here's a buy signal, other sell signals. I think this is it. We're going to go down, in my opinion, to 344 and a third. And again, maybe a little lower to 341 and turn around and go right back up again. I am thinking is very likely. Next, overbought condition on the Russell 2000 and closed an old gap from a couple of months earlier. Finally, turned down dramatically today. No surprise. Overbought conditions generate reversals. Oversold conditions generate a rally instead of a break. At the bottom, at the bottom. Sell signals at the top. Rally after the green. All right. This is not, in my opinion, going to come down too much further. That's a little bit of a problem because I am expecting the other indexes to come down more. We already came down to the neckline. So if I'm right that it's going to dip down more, it's pretty much going to kill the head and shoulder pattern, which so far looks pretty normal, pretty legitimate. We'll see what happens. This is supposed to typically textbook stop the decline at the neckline and turn right back up again. Getting below that, I know there's a gap to close at 169 and 3/4. And if that happens, well, the head and shoulders probably not legitimate anymore. And I'll erase the markings and the lines and so on. But so far, this is exactly what it does right out of a textbook. But because of the other indexes looking like they're going to come down significantly more for a couple of days, this is not going to stand still. And it'll maybe ruin the pattern. Next chart, I'll just show you the Russell 1 minute. And it really got weak and stayed weak. And we're now near the lows and it just keeps coming down today. There's no sideways. It just went up to a high and went zoom back down again. Okay, futures, futures, futures. Now, we start with the E-mini again because it's a different perspective. Got overbought, turned yellow, trying to slip back down, and I think it'll hold at support and turn back up. Next is the NASDAQ. Same story, came very close to previous tops, broke out of its downward slanting channel or wedge. Excuse me. Those patterns are very similar, downward slanting wedges and downward slanting channels. Next chart. Bonds coming back up near the high of the day. If this chart, the bond, 30-year long bond, starts screamingly higher, keeps on going, it's going to cause the stock market to probably start to turn around and go back up. Therefore, I am not expecting this to rally a lot more immediately. I'm expecting it to stall out right here and slip back down maybe to that really good little support area at 112 and 8/32, give or take a couple ticks. That's a low, give or take a couple ticks, for 6 times out of 8 days in a row. Very unusual. So I'm looking for that to be touched again. Next, 10-year notes did have and does have what appears to be a darn good head and shoulder bottom. The whole thing is slanted upwards a little bit. That's a little bit off kilter, but that's very normal. To find a perfect example of a head and shoulder is almost impossible. So they come in variations just like people do. So last shoulder low, November 13th. We punched the neckline but didn't break it on Tuesday and yesterday, Wednesday. And we're there right now, Thursday. If we close any significant amount higher than we are now, making new highs for the day, we will be starting to break out of this formation, which has a supposed minimum upside objective of 112.06. That's 6/32. So 112 and a half or so. I like the looks of this. Yeah, there's nothing wrong. We'll see if it can break out or not. Now, it's okay if it dribbles back down slightly for a couple of more days, but doesn't really do too much. I'm thinking maybe back down to 107.21 area right in here and then up. But it really shouldn't challenge that low. Well, we got two lows about the same over here, so yeah, maybe it could. But that's definitely the lowest, 106.30, 107. Next chart. Crude, ba-boom. Rallied, got to resistance, turned around yesterday and slam dunked today. Now getting oversold and getting into support. And it's the same darn area since December of last year that has been bottoming out within. And I could drop the bottom of the support area some if I wanted, like that, which is legitimate. But I was trying to keep the bottom across that low right there. So I'll raise it back up the way you've been seeing it. Whoop, 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 like that. And we'll see if it bottoms out in the red zone or maybe a little under in the next week or two. But I'm still bearish. Getting oversold today probably means it's going to start rallying, but whether it'll bottom out and rally for a couple of weeks or more is a little bit different story. Next chart, natural gas. Big break, killed yesterday's too bad buy signal. So that's disappointing. ER3 bought it at the yellow dot, green dot, and got stopped out at the yellow dot. So we did lose, unfortunately, from 3.183 down to 3.069. That's our day trade loss on ER3 today. We're flat. This looks like it might have a new low close for the trend down. And if we start to get below 2.9 on a closing basis, this could get very, very bearish for natural gas. Buy signals, when they don't hold, are telling us that the market is very weak and we're going to be looking for lower levels. More often than not, sell signals work out pretty good, like that one and that one. This one for a few days at least. Plenty of room for profit potential. And not quite so much for that one. That one's spectacular, and that buy signal was very good. So there's only really one of them in here that was so-so to poor. And the current, too. Next. Head and shoulder top with double shoulders on heating oil. So that's very bearish for heating oil. If it starts to work, and look what we got today, a bearish engulfing Japanese candlestick. It says we're supposed to be going down some more. That's about it. Not how far, not how quick or anything like that, but just lower. And I believe it. The pattern says so too. And I've been talking about this pattern for weeks now. So the minimum downside objective is 2.1, and it could break out any old time now. Not very close to oversold. Watch out. We're going to see a big bear move here in heating oil, I think. I know it's the beginning of winter. Next, gold. Rally. Can't get a handle on this at the moment, so I'm going to not make much commentary. We just got a major sell signal that worked very well, but that seems to have been past tense. ER3 caught a short sale also. That's great, besides ER1. And we still have this gap to close down here. So my best commentary is that this rally is going to fail very quickly, not because of overbought, but just because of the overall major long-term downtrend, and go down all the way down to close that gap. We got the bottom of the market. We got the rally high. We got the bottom of the market. We got the high of the market. We got the bottom of the market back there, and we got the high over here. It's just been great for precious metals this year. Most of these signals have been outstanding, not just good. Next, silver. Same commentary. Sold it, small profit for a day or two. False buy, but it tells you it's trying to bottom out. And finally, kaboom, we have a bullish signal at the bottom of a huge rally. that took about a month. The double top, we have both sell signals. The bottom, we have green. The top, we have red. The bottom, we have green. The top, we've got red. This is just dead perfect almost. We missed this one, unfortunately. And am I going to get another sell signal? We're almost overbought. That's one of the things I need. So I wouldn't trust this rally very much. I think it's going to turn down soon, but no specifics for you at the moment. I'm sorry. I got to wait a little bit of time. Next, oversold conditions in platinum. Reversed it. Not unusual, typical. It didn't quite get, and it doesn't have to a support area. So that's still there, and it may be tested later. But right now, there's a possibility the rally could come up a little bit more. But look at what it's been doing. Lower, low, rally, lower, low, rally. Nice sell signal. Nice buy signal for that matter. Almost a lower low, nice buy signal. And another lower low. We didn't get a sell and we didn't get a buy. All right. Zigzagging its way down. Bear trend. Good since April. I think it's going to continue. No sign of it changing, except for the long-term support area. That could have a major effect on platinum. Major long-term support areas are obviously more important than short-term stuff. All right, next. High-grade copper. Yeah, bear trend, looking for weakness, probably new lows. Next, soybeans, got overbought. We are long still from the bottom of the break on October 12th. It's been and still is a great trade, losing a little bit of our profit today at the moment. Trailing stop, you can make adjustments to this if you need to and make it run up faster. That way you're going to get stopped out quicker and maybe miss a very big longer term trade. Maybe not. No guarantees in this business. Next, bean oil. We just got out of a great short sale from the very top, and it was the second high of a double top formation, which was the head of a double top. I'm sorry, the head of a head and shoulder top also. And when we broke the neckline, I started screaming bloody murder with a downside objective of 50, which it sure as heck got down to. We got down to 48.74, oversold, turned around, stopped out. Great trade. What next? Not quite sure. Trend down. That has got to be, your tendency. The trend is your friend. So if you got nothing else to use for tools, is the trend down or up? That's it. Next, soybean meal. Well, obviously the trend is up and we got overbought. And it did it again the last few days. This correction could come down to 424. It looks like it's hanging in there pretty well at the moment. I have to be short-term bearish. A lot of support below. Trend is up lately from May of this year. We'll see what happens. Next, corn. As I've been saying, it's going to go the way of wheat. A little rally today doesn't change the overall picture at all. Last time we rallied, we got up to resistance and a little bit through it, but it died right away. New lows to the trend just a couple of days ago. And that is a new low for a long, long time. Ever since February of 22, year and a half. Bearish, looking for lower levels. Next, wheat has been doing exactly that already since September. And today made almost a new low. It looks like it's the second or maybe the third lowest low for the whole damn thing since the war started. And that was more than a year ago. And guess what? We got a sell signal on the top of wheat. It is one of the most spectacular signals I have seen in decades. Remember, it's been 5 decades I've been watching this stuff. Next, cattle. Looking for lower levels, looking for new lows. Last sell signal, top. Next one, backward in time, top, 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 a top, green, the beginning of a rally. And unfortunately, that's about the only green one we've got. Most of these tops we picked off very wisely. Okay, so new lows I'm expecting. Next, hogs. And we were long Miss Piggy from the bottom on October 25th. And the trade lasted until November 8th. We're out with a very nice profit. And now it's below where we got out, although it had a rally in the interim, in the meantime, up to resistance and stopped. And as I've been saying, we're between a rock and a hard spot. And here comes the, I don't know, is that the hard spot? Pardon me. I think we're going to bounce off of the red zone. And there may be a much bigger formation developing, but I got to see it start to, move back up again after coming into the red zone. Next, OJ. Well, here we are, ladies and gentlemen, right back up to almost as high as we were on October 31st. And that was a giant sell signal, a whopper. We were getting short with the R1 at around 392. Not that we bought the bottom, we didn't, but it got down as low as 343. A whopper of a move. And then we have an offset. So there was a great trade, and we're overbought for the last 2 days. Again, near previous tops. I think it's about to turn back down again. In cocoa, Tuesday, we had a bearish engulfing ER sell signal, much like orange juice. And now we're back up to where the new short ER3 took place, and we're short a little bit lower than where we are right now. I'm looking for lower lows and below 3,929 or 35, and a test of support next. Coffee. Sorry, something in my throat. So, new lows for a few days, I expect. Back down in the support area. Drag that to the right a little bit. And probably bottoming out around 164 and then higher. Next. Almost a bearish, looks like a bearish engulfing, except it's currently higher on the day. So it's actually a bullish engulfing at the moment. Trend is up, definitely. Has been for a very long period of time. Resistance has stopped the rallies lately in the last couple of months. The question here is this building a large, longer-term top or not? It's in the midst of it. If it's building it, no downside breakouts yet. But what if it's not? We will see new highs very soon and a new high close and be on our way up to another plateau or something. So I really can't come to a conclusion, I'm sorry, in sugar at the moment. Next. Oh boy, we bounced off of support and oversold conditions, one of my classic combinations, and we have had a rally already. Bearish engulfing at the moment implies that this rolling top, which dropped off to support again, could challenge support again. We'll see what happens. Not super confident about my commentary in cotton. So we are finished now. We're going back to the E-mini, which is still going sideways. A quickie review, we're down very little in the spider, a quarter of a point, 0.23. We're down a little bit more on the DIA. The market's going sideways at the moment. Nothing particularly profound about what's happening except big overbought conditions, stalling out, and I think ready for that correction. You guys have a great day. Mañana. I'll be gone next week, remember.